Good morning, everyone. This is daily trading analysis with the weekly recap for this week, which has been pretty volatile. Very difficult to trade with a lot of news from the Fed, from the economic data, from earnings from the banks, and the war that is spreading because of Iran. So let me go through all of this in this pretty damn deep and interesting video. So follow me in this journey today because today is going to be very interesting. And as always, we are going to perform really deep technical analysis in a lot of markets to really for you to be aware of what is happening everywhere. Let's start with the economic data. Monday and Tuesday, we got really nothing. The big day was Wednesday, where we got the inflation readings, and they were pretty bad. Everything was increasing month over month for the core, year over year for the core, month over month for the headline, and year over year for the headline. So this was all a miss, and the market really freaked out. And also, we adjusted on the Fed Watch tool the interest rate path moving forward for rate cuts, and it's no longer 3, not even 2, maybe 2 starting in September. So this is really affecting everything to the downside. So on Wednesday, things started to go south, and Thursday we got the PPI in very different way. We basically lower on the month over month and lower on the PPI for the core, but this was not enough because the Fed were still pointing towards an environment and an outlook of maybe higher for longer, and the narrative was spreading. Despite that, markets rallied because Apple announced AI models upcoming at the end of the year and starting in 2025. So the AI pushed the market to the upside, but we have to focus on the fundamentals. Finally, on Friday, we got the really bad consumer sentiment. 77 is quite low instead of the 79 expected and the previous one. And let me just highlight another minor impact thing on Friday, because we have to really be aware about expectations on inflation. Look at this, 3%. For the preliminary on April, 3.1%. So not only consumer sentiment is going lower, but the expectations on inflation are going creeping higher. So the consumer is also thinking about this. It's aligned with what the Fed is saying, higher for longer. The markets are the ones that are not feeling this. So we then suddenly get these huge corrections that I think everyone should expect in this volatile environment. And not only the inflation is a problem. We got earnings from the banks, and JP Morgan disappointed guidance on interest income, obviously. Wells Fargo, lower interest income, and Citigroup, better than expected results, but also dropping lower as the entire financial sector keep going lower. In terms of sectors, this is the 5-day performance. So as you can see, until Wednesday, here we have pretty normal. I guess that's okay, pretty normal performance. But on Wednesday, on CPI, everything went south. And then finally, this is Thursday, and this is Friday. On Thursday, a little bit of momentum, a little bit of let's see if PPI can, in the short term, change the future CPI data. But here is basically war, fear, and disappointment. So in this day, on Friday, let's focus on yesterday's price action on the sector funds. That's literally a disintegration of any market. Utilities were the defensive one, staples defensive one, industrial defensive ones. And look at this. This is materials, commodities, communications, energy, consumer discretionary, technology. I mean, it's everything ultra low. And we I like to expand our view to the 2-week sector performance. Everything was basically flat until this week, in which we were just destroyed. The performance was down, the CPI changed the rules of everything, and I think energy keeps being the king. Communications, technology are performing well due to the AI FOMO that is still present. And look at the real estate sector, financials, consumer, staples. I mean, this market, it's quite feeling the pain in a lot of different from a lot of different vectors and situations. And finally, on Friday, I was talking about war. Biden expects Iranian strikes on Israel sooner or later. And during Friday's session, around midday noon, there were announcements on Israeli media that 50 missiles were being launched from Iranian soil, and then a lot of news came out on Twitter saying that they were starting the attack. So war combined with disappointing earnings and combined with higher inflation for longer is just the perfect storm to just announce a huge correction. So having said that, on the fundamental side, now let's see how that correlates with the price action. This is the Nasdaq weekly chart, and it's been a long time trapped in this range. This is 1, 2, 3, 4, 5, 6, 7 weeks. It's a month and a half trapped in this range. Up, down, down, up, down, down, down. So there's literally no reason for us to go lower, no go higher. Volatility spiked to unbelievable ways. We are going to see that on the VIX right after this chart. But look at this. Since this range got established, there's been nothing more than shorts piling in. And despite these kind of moves engulfing, it's just up, down, up, down, up, down. Look at this candle, engulfing bullish, engulfing bearish. And also notice, this is our week. Started with a pretty narrow range on Monday, then Tuesday increased, Wednesday, Thursday, on Friday. Come on, are you seeing this increase in volatility? This is insane. That's why you have to take risk management into consideration always, because we are going to go to lower time frames to really see the key levels that are still holding, but we are not moving. The only thing that is increasing is this volatility in this range and the possible catalysts that may provide us the opportunity to go way deeper lower. Let's take a look real quick to the VIX, because I've been tracking weeks. I have my alert around 16 level. This is quite an important level because the VIX usually tend to spike at the 16 level, and everything started in February with this first spike here of 23%, but then everything was chilled. Another spike of 18% at the beginning of April, followed by a period of, okay, let's not freak out a bit. Let's see what happens. And then last Friday, another 22%. So how are we understanding this? You know how the VIX works, but I'm not going to go deep in that and explain the technicality. Just see this spike and the kind of move that we're just kind of building here. We were, well, between 15 and 11 is just a bullish trend market, but we are starting to see these huge spikes in volatility. Another line that we should take care of is the 20 level. Between 60 and 20, I mean, we are starting to feel and see some fear on the markets. Above that, let's prepare for a maximum pain and a big correction in every single market. Having said that, let's continue with the Nasdaq with this volatility in mind. The first thing I would like to point out is this kind of volatility, how it affected the entire week. This was the CPI number, Then another day of huge short squeeze due to Apple. Please review my video on that day of the Apple short squeeze. That was insane. And coming into Friday without knowing anything about the war, without knowing anything about the bank's earnings, I was just chilling up here. And I was trying to find some kind of levels like this order block here, this 15-minute fair value gap, and also the fee retracement for the golden pocket that also aligned with this consolidation on Thursday. Those were my levels. So level 1, level 2, level 3. Neither of those levels did what I wanted when the price action came to that level. And that was a sign for me to just stay out of the market. I didn't trade on Friday. And I mean, it all started during the overnight. And the first cue was dollar being absolutely a bullish train that never stopped. Just high, 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 high. And I was quite nervous because, for example, I follow the UK market during the overnight, and it was just, this is all-time highs for UK. For UK, all-time highs. So quite a divergence there. But then I found out, okay, we are rejecting all-time highs. We are starting to see the dollar consolidating. Let's see what Nasdaq does at these levels. So what happens is, yes, I am just telling you this because sometimes the price action just does not react the way you want. And that's your first sign to really sit tight and don't do anything on a Friday, because anything can happen, and did happen. This order block responded. We tried to go higher. Let me just go as I was. Go higher, but then we lost it. So this is a fail. I cannot buy just down here. Then another sell side liquidity, big push into the second level, the green line. This is the 50% retracement, just like a knife in butter. And then finally, the final golden pocket with another level of liquidity down here, nothing. A little bit of bounce there, but the open was coming. We opened, we tried to go higher, and the first inverse fair value gap on the 15-minute, let me just review that for you. This 15-minute, this 5-minute, there were a lot of correlations here for shorts into the open to just take a stab. And this is your high of day. So they took a short and let it fly, basically. Apart from that, there were no other opportunities. It was just sell off and sell off and sell off, or since the overnight, for more than, it was 400 points, almost 385 points. That's a 1.65 negative in the Nasdaq and a minus 1.44 on the ES. And the ES was even weaker, because on the daily, we can see that we are closing below this level. The Nasdaq is not doing that on the daily. We are still holding this level. But the S&Ps, due to the bank's earnings, were basically being demolished. All the liquidity that I was tracking on the ES was, let's go to the 1 hour. All these pools of liquidity were taken. So the ES is way ahead of the game on the bearish side. This is the trap of the all-time highs. Big dump, lower high, big dump, lower high, big dump, lower high, big dump. It's like a book. You cannot deny that this trend is just ultra bearish. The Nasdaq is being fueled by some of the big tech companies. We can understand that. Apple was just the only one that was performing due to their own catalyst. But look at the rest. Microsoft minus 1.41, just being melted down. Tesla being melted. Amazon super tight to consumer. really disappointed performance. Obviously, Google tried to go higher, but the AI could not hold. Nvidia is also melting. Let's check the daily real quick because we are really trapped here. And this might be a lower high that we might see Nvidia below 822. And finally, Meta, right below all-time highs, also melting down. So, excuse me, this was quite a clear day starting from the dollar to really see this outlier. This is your first sign. The second sign is just all your levels being destroyed. You can take stops, but you have to take the stops. I didn't like it because I like confirmations on a Friday, and I couldn't get any confirmation about any bullish bounce. Then the yields are continuing holding. I mean, they pushed 5%, they retrace a bit, but they are still here. Let's see what happens with 4.85. But the 2-year yield is in a big trend pushing. Look at this candle after the CPI. The 10-year yield it's holding even better, 4.6%. These are really damn high yield. The treasuries are falling down. We were waiting for this to really see if the trend is going to break down, and we are seeing that on the treasuries. High yield corporate bonds, the junk bonds are also starting to look quite bearish, started to see movement and consolidation below the range that was being held for so much time since December last year. Small caps are being destroyed. The S&P, this is one of the causes because of higher yields, higher interest rates. These small companies cannot get funds as efficient as before, and they are just being destroyed. People are selling them. And also the banks, JP Morgan minus 6.47. This is huge for Morgan. Look at this candle. Look at this gap. This is not normal. Wells Fargo minus 0.39. It was affected, but still at least holding some key levels. BlackRock being destroyed also. Citi being destroyed also. It tried to go higher, but then the investors said nope. So the entire XLF took a big hit. And this is a big part of the S&P 500 and also a big part of the economy when you talk about sentiment. The economy is financials, and the economy is also big tech, and the economy is also the small companies on the small caps, Russell 2000. So when you combine all those three, you can see that the RSP, the equal weighted ETF, was down 1.59%. And we are below this pivot that I like to track, this dashed orange line is the previous all-time highs. We took a new all-time highs, and then we are now below the previous one. That's a sign of weakness. That coupled with the fact that the percentage of stocks above the 200 moving average, that's a long-term moving average, decreased by 5%. So we are seeing weakness overall spreading. The percentage of stock above the 50%, the 50-day moving average is even lower. We are below 50%. So more than the 50% of stocks are below the 50-day moving average. This was not a big momentum day to the downside. It was just a broad sell-off for all markets. And this is the final momentum indicator, 20-day moving average. There are a lot of stocks. 37% of stocks were closing below their 20-day moving average on the daily, which is super important. So we are approaching these lows, but we have to think about the fundamentals also. So the fundamentals broadening are quite bad, and I don't see us doing anything crazy in next weeks. I think we can see another red week like this one. Perhaps this level is going to be unbelievably important. The 18,000 level on the Nasdaq, which is pretty much aligned with this. it's going to be super, super interesting. We have this pivot down here, but the only problem is that the Nasdaq is diverging from the S&P counterpart. So we have all this liquidity that we've been building on the S&P, and we have this daily bullish fair value gap and this pivot. So perhaps I think 5120 was one of the big levels, the same way as 5170, where it was 5170 was when I saw 2,000 contracts being sold here. So this is tied with the gamma of the options and the VIX and all that stuff. So pretty much I can see continuation to the downside for sure for next week. There are certain levels that I will be watching on the S&Ps, but in terms of the Nasdaq, the most important number for you, it's 18,000. And after that, we have 400 points lower, 17,600. This is the movement that I think is going to happen sooner rather than later. And that would be like at 2.49 in a week. So let's do a quick recap of that. Let's remove all these that I was tracking on Friday. And let's do a quick technical analysis to perform our forecast, to clean this a little bit, and to go start with the 4-hour. We have to open our eyes. This liquidity up here it's okay. I mean, we are not going to see that anymore, at least for now. So the weekly levels are going lower. These are the blue dot lines that I always track. And on the 4-hour, we can see that there's a bunch of liquidity down here. The S&P already took this liquidity down here. So I expect this to continue lower due to the weakness of the entire market. So these liquidities are my first target for next week. And after that, here comes the daily. The daily fair value gap that we've been holding, the last liquidity is this one at 18,000 at 6. And then we have this 1-hour and 4-hour, which I think is going to just continue lower. So let me just, yeah, this is already done. So I have already been preparing this. All this liquidity I think is going to be taken, and at some point we might see some bulls trying to commit below 18,000 until the range of 17,700s or things like that, like this. And if we see Nasdaq down here and if we start seeing more weakness, for sure, the 17,600 opens up. And that will be the range for next week. For the upside, I mean, anything can happen, obviously. I will just track. It's as easy as this. Let's just track the pivot retracement on the golden pocket. This would be a 4-hour inverse fair value gap into the 1-hour, which is basically this one, perfectly aligned with the golden pocket. Perhaps this is going to be tested to really make another lower high into the dump for liquidity. That might happen. So if you think that the Nasdaq bouncing on Monday can provide you with longs, be really careful because we are in a huge trend to the downside. Be really careful because shorts will be more than happy to add at these levels. These are technical levels to add into positions. On the 30-minute, I think there's nothing on. So on the big picture, we have two options. We have this option that would trap even more bulls, and we have just the melt option that is this one into this range, which all depends on the uncertainty of this weekend and what is going to happen with Iran entering Israel war. Anything can happen. What is true is that everything is leaning to the downside. There's a lot of volatility, a lot of fear. So be really, really careful. This is a very difficult market. You can just be demolished in a couple of minutes, and you have to first think twice before taking any position, manage your risk in case it goes the other way, and protect your capital, protect your accounts, and protect your trading. This is really, really the most important point in time for this year to see what is going to happen with the entire Nasdaq. And apart from that, let's end the video with a quick review of what is ahead of us for next week. So for next week, we have retail sales on Monday and more retail sales on Monday. So Monday is going to give us a little bit of insight about the retail world, the retail sector. Let's see how Amazon performs and Tesla performs, but more Feds. Tuesday, building permits. The housing market is pretty important for the Fed. They need to see a cool down on this sector for them to be confident about maybe start thinking about cuts. Wednesday, mortgage. Thursday is just initial jobless claims, so no big news. A couple of Feds also talking, and Friday is also Fed. So next week, it's all about retail and housing. There will be more, not only economic. I think the most important part of next week is understand the conflict in Israel and how it's going to affect the earnings. The earnings for tech are going to start in a bit, in a couple of weeks. So be really careful, because I think the earnings are going to disappoint a bit, and that would cause a lot of pain ahead if you combine all that sentiment with the possibility of bad earnings. I mean, higher interest, war, bad earnings, broadening the market, defensive positions in dollar yields and other markets. I mean, look at gold. Gold was rejecting that. Copper was pushing higher. Crude oil is just rejecting, but it was super bullish. So even the defensive sectors are freaking out. So the best advice for me is just, as I was doing on Friday, I gave you two levels, two possibilities. Be careful with these possibilities, the most dangerous one for bulls, because you might have here a lot of shorts willing to add on that technical level and on a pullback from their positions on Friday. And then we could just melt into, I think this liquidity is more than done. I think this range is for next week. This is my range for next week is from below 18,000 to 17,600. The S&Ps, remember, are ahead of us. We might see S&P just melting and dragging the Nasdaq down. So be really careful, because next week is going to be really difficult for everyone. And that's all from my side. As always, thank you for your time. I put a lot of effort in these weekly recaps. I hope you found these videos useful. And if you found them useful and you like them, please give it a like, support the channel by subscribing, and just let me know in the comment down below how I can improve these videos, how you like them, what you like, what you don't like, to help me improve the channel. And as always, discipline, patience, risk management, those are your tools, your main skills to develop in order to be successful in this job. Basically, you have to master those if you want to be alive, to even be able to trade in these markets. Markets are being difficult. I understand that. Everyone is feeling pain. Everyone is feeling the uncertainty. You are not alone. But take some time to review your data, to review your trades, review the news, analyze your charts, be prepared for next week. And as always, have a nice weekend and see you on Monday.